red-hot inflation data. That's the biggest thing we're watching, of course, this morning. The Consumer Price Index coming in at 8.6% in May. That's a new 4-decade high. No peak in inflation is in sight. So let's take a look at futures here this morning following that data. And by the way, the core number was also higher than estimated. We are seeing futures taking a leg lower after the plunge that we saw in stocks yesterday in anticipation of this report. It wasn't a sell the rumor, buy the news kind of situation here this morning. The selling is still happening. And look at what's going on in the Treasury market as well, because there, of course, we are seeing a fairly dramatic reaction here. Although actually, Look at that. We're seeing maybe a little bit of a backup in yields now. We're going to parse through all of this. For that, let's bring in Yahoo Finance's Brian Chung and Inez Ferre. They're going to help us dive into this report further. Brian, let's start with you and sort of the big picture of what we are hearing on inflation.
Yeah, so we need to take a step back and just kind of take a look at the data that we got this morning from the Bureau of Labor Statistics. Again, on a headline basis, we saw prices increased between April and May in this country, up by about 1%. Actually, that was about kind of what we were expecting to see on a month-over-month basis. When we take a look, though, at a year-over-year basis, you can see 8.6% was the year-over-year change, hotter than the estimates of 8.3%. Now, what's interesting is when you take out those more kind of volatile pricing components like food and also energy, we actually saw the number come in at 6% on a year-over-year basis, still relatively elevated across the board. Unpacking the components of this report, you can see that a big driver of what we saw in the May inflation report is, of course, energy. We saw fuel oil increase by 17% on a month-over-month basis. Gasoline up 4%. Keep in mind, fuel oil, actually, the overall prices have doubled in the last 12 months. Of course, food in focus as well, up 1.2% month over month. Apparel, we've been watching the story on the clothing retailers. That was up by 0.7%. And then, of course, we saw a lot of drivers in this inflation report from the reopening types of activities. When you take a look, hotels and motels up 1%, but airline fares up 12.6%. That's continuing another month of double-digit gains that we've seen in previous reports. And also pay attention to owner's equivalent rent. This is a measure of the cost for owning a home or renting a place. That's been up 0.6%. This is stickier type of inflation that tends to hang around longer. So across the board, we're seeing high price levels. Obviously, this shows that inflation has not peaked yet, although I want to point out, not necessarily all categories going up. Smartphones down 5%, televisions down 3%, and for some reason, clocks down 3.7%.
Are people still buying a lot of clocks?
Collectors.
But the time doesn't exist anymore.
But the egg index
so
up 5%.
Yeah.
So let me bring it back to the egg index. Egg index up 5% in the month. Look, Brian, what does this mean for Fed policy?
Not much. They're still going to raise rates, and the game plan is probably still for another 50 basis points next week. I mean, it's been 6 weeks already.
What about September, though?
September is definitely in Pandora's box because we know that the Fed policy has only been, June and July will get 50 basis points each likely. Of course, we'll have to listen in for Fed Chairman Jay Powell's press conference next week. But we have to remember what Jay Powell has told us was that this is not a time for particularly nuanced readings of inflation because, look, if it came in at 8.6% on a year-over-year basis or 8.3% or 8%, that's still high.